What if I told you that you could sell your home and keep every dollar of your profits without spending a dime in capital gains tax? No gimmicks, no loopholes, just three legal strategies that most homeowners don't even know exist. So if you're thinking about selling or just want to plan smart for the future, you need to hear this. I'm going to walk you through 3 ways to pay 0% in capital gains tax when selling real estate. Simple, clear, and yes, 100% legal. Let's get into it. The first one is for people selling their primary residence. Yes, the home you actually live in. It's called the 121 exclusion, and it allows you to keep up to $250,000 in profit tax-free if you're single, or $500,000 if you're married. Here's how it works. If you've lived in your home for at least 2 of the last 5 years and you sell it for more than you bought it for, that profit might be completely tax-free. Let's say you and your spouse bought your home for $200,000 and sold it for $450,000 years later. That's $250,000 in profit, and you pay $0 in capital gains tax. No need to buy another house, no special paperwork. You just meet the 2 out of 5 year rule, and the IRS will give you that break automatically. Now, let's say you don't qualify for the first rule, or you made a smaller profit. There's another way, the 0% long-term capital gains tax bracket. In 2025, if your total household income is under or around $94,000 and your gains are long term, you may still pay nothing in taxes on that profit. So let's say you're retired or living on a modest income. Maybe you're earning $40,000 a year. You sell your property and you make $50,000 in profits. Because you're under that income threshold, the IRS might not charge you anything in capital gains tax. This applies to some real estate and even certain investments. So it's worth checking with your tax preparer if you fall in that income range. The third way is mainly for investment property owners and not your personal home. It's called a 1031 exchange, and it lets you sell one investment property and use the profits to buy another without paying taxes on your capital gains at the time of the sale. Here's the catch though, you have to follow the IRS rules very closely. You only have a certain number of days to identify your next property and close on it, and the value has to be equal or greater. But if you do it right, you can roll your profits into a new property again and again, deferring taxes each time. And if you pass those properties on to your children, they may never have to pay capital gains tax on those properties as well. The tax basis resets after you pass. So, quick recap. Live in your home 2 out of the last 5 years. You could qualify for a $250,000 to $500,000 tax break. Make under $94,000 a year. You might be in the 0% tax bracket for capital gains. Selling an investment property. Use a 1031 exchange and defer taxes by reinvesting. These aren't loopholes. They're legitimate tools written into the tax code that you can use to protect your profits. So if you're thinking about selling and you don't know where to start, don't worry, I got you. You can grab my free home seller's guide using the link below. It breaks down everything step by step in plain language on how to prepare your home for sale. And if you'd like to talk through your options or see what your home might be worth, especially if you live in South Florida or the Miami area, I offer a free, no pressure consultation to help you get clear on your next move. Before you go, I just want to leave you with a little encouragement. Remember, the plan of the diligent leads surely to abundance, but everyone who's hasty comes only to poverty. That's from Proverbs 21, verse 5. Taking the time to plan your sale the right way, wisely, patiently, and with guidance, can lead to blessings that last far beyond the closing table. I hope this video was helpful. Thank you for watching, and I'll see you in the next one. Bye.